Hello friends, welcome to my channel Fintech Logics. So today we'll talk about another mutual fund ratio which is called as beta. Now beta is not a new concept. You would have heard about this a lot while doing your share analysis, but the same thing can be also extended to mutual funds. So I have created other videos on my personal finance series. If you have not seen that, I'll try to give some links here. Please have a look. If you like my content, please consider subscribing to my channel. So let's start on our topic of discussion today without wasting time. So we are talking about beta. So in short, the meaning of beta is that we are talking about the relative risk of this mutual fund against certain benchmark. So normally for this analysis, the agencies map your mutual funds to certain benchmark. You would commonly hear about S&P index being a benchmark for many of the mutual funds. So we are talking about how risky the fund, less or more risky the fund with respect to the benchmark. So that is what the beta means. So let's try to interpret that, simplify that to understand a little bit more about this. So let's say we are talking about a beta value of 0.95. Now 0.95 is less than 1. So that means that this particular mutual fund is slightly less risky than the benchmark mutual fund, which is actually a good sign. Now it can also be the reverse way. If your value would have been 1.05, so that would have meant that okay, this mutual fund is slightly having a higher risk than the benchmark fund. That is what it means. So giving example in the left hand side, let's say we are talking about a 0.88 versus 0.82 category average. So normally you would get the data in this form. So what does this mean? So this means that the mutual fund that we are looking at is having a beta value of 0.88, whereas the peers in the same category with probably the similar returns with similar content are actually having a beta value of 0.82. So that means this mutual fund is higher in risk than the peer category, which is a bad sign, right? So we should be looking at this definitely as this interpretation. Now let's look at, can it be negative? Yes. So technically beta value can be negative, but normally it's not there because your mutual funds are normally tagged or mapped to the benchmark that they would correlate to or would have a covariance to. So you would not see that, but as a concept, your beta value can be negative. Now, there should be some cautions to follow while we take this for our investment decision. The first thing is that this becomes limited in scope and inaccurate where there is lot of volatility in the market. So if you see continuously for last 15 days or 1 month, there is a lot of variation, up and down movement in your market. So at that point of time, because this value is based on historical data, this actually is not able to do the justice properly. It will not be that accurate at that point of time. So at those times for investments, please do not use beta for your decision making. Second point is that we have to understand that okay, we are talking about relative risk with respect to a benchmark that is not set by you, that is set by an agency. So for your investment decision, definitely use this and also use betas of some other peer sectors which might have some other benchmark index to make a better decision. But definitely this tool or this ratio gives a lot of information to us about risk, that we should not be relying only on the return. We should be also looking at the beta for our investment decisions. I hope you liked my video. Thanks a lot for watching me.